Hello, hello, hello again, everyone. How is everyone doing? Don't need to go through the repeat session. Hey, George. Hey, Anissa. Let's see. It might be a lighter session today, but I wanted to bring on Bob. He finished up his other interview. You know, it's tough when you're as important as Bob is to juggle all these
Oh, here we
commitments.
go. Here we go.
I'm just going to bring him on, because we don't want to wear him. I mean, he's had a busy morning. He's
I'm ex- my face is exhausted from the camera.
Yeah, I could tell. You're going to have to go put some more smile cream on.
They actually draw smile cream out of my blood.
Oh boy. So all right, let's get
All right.
your I mean we already talked the markets popped go with the non-farm payrolls numbers. What's your take on it?
So the number was a number that the market could feel fairly comfortable with from a perspective of the Fed. Obviously, there's a little bit of slowing. I think a lot of people will immediately jump to that 3.7% unemployment rate, but that's not as bad when you consider that there was a rise in the labor force participation rate. Now, I haven't done the calculations one to one to see whether that's the exact reason why we went up 0.2%, but it's some of it, if not all of it. Okay. People who had decided that they didn't have, there was no job in the world for them, have now decided there is. Now, according to the JOLTS jobs data, there's plenty of jobs for those people. So they should be able to find them pretty quick, and that unemployment rate should fall. But we are seeing layoffs. I think, George, it was you, maybe it was somebody else who was pointing out some layoffs yesterday in yesterday's live stream. We are seeing layoffs, but the slowdown is starting to hit employment. We had a beat on the headline number, as you guys know, but it was still over 200,000 less than last month. Last month's was revised lower, only 2,000 jobs, so not a really big thing, but it was revised a little bit lower. Two interesting points to take from this. The average hourly earnings rise, it rose, but it rose less than expected. So there's two sides to that. Number one, wages are still rising. That's not good for the Fed. Number two, they rose less than expected. So it's less than the market was trying to price in, at least as of yesterday. I don't know where it is right now, but we talked about the expectation of 75 basis points yesterday being 74% spot on. This morning, when I checked, it was 70. It went down to 68 right after the number. It went down to 62 last time I checked. I suspect it's higher right now.
It's
Where is it?
64 right now.
We're starting to see yields crawl back to where they were at the number. This number to me is not strong enough or weak enough to change Fed expectations. Now, the market has already taken, as of yesterday at least, 10% of the probability of 75 basis points. But I suspect we'll be off the highs on equities before the day is over. Good to see you too, Coco. I suspect we'll be off the highs in equities. I'm not trading it because I don't have a signal to that effect, but that's just my guess based off of this number. I think this number was comforting to people who want a pause or a pivot. I think it was a little bit comforting, but we still have wages rising. We still have a very strong jobs market according to this particular set of numbers. So that's my take on this. Watch yields. Yields were lower directly after the number. By my last tally, we actually had the 2 year lower, the 3 year lower by 9 and 8 basis points respectively, but the 20 year and the 30 year are actually higher now. So remember, the further out we go, the more it reflects inflation, right? So the 10 year is still down 3 basis points versus yesterday's settlement on my last read. So that's really my whole take on it. One last little side note: one of the biggest industries that lost jobs, mortgage brokers. I thought that was interesting. That's all. I don't have anything else for you to say about it, but I thought it was an interesting point.
The 10-2s hit the second target on the double.
There you go. One more to go. Yeah, curve steepened a little bit more. And as you can see, if the 2 year is down 8 or 9 basis points and the 30 year and the 10 year are not down as much, that's steepening. Pretty
Yep.
simple equation. So that's my take on it. I don't think it's a critical number. I think it came in right in that sweet spot where it's not going to have that much of an effect. So we'll have to see. I think the follow through that Mike and I expect yesterday is probably going to happen, but I don't think it's necessarily going to be a blowout upside day for equities.
I mean, we're trying to pull back. I'm watching this key. I have that very short term buy if we do close, like that's a micro buy above yesterday's high for follow through for only a couple days.
Okay.
So that's the only thing I'm watching before the next rollover play.
Yeah, and I
Uh,
think the next big thing to look at is the OPEC meeting. Honestly, I mean, we got crude oil up today.
we got
I suspect. I don't know. I don't know what to say about that. I suspect there'll be some pretty harsh language at least. I don't think they'll do anything, but I really am expecting some harsh language out of OPEC. That's on the 5th.
and then we have CPI numbers right next week.
Yeah, we have CPI next week. I mean, obviously CPI matters, but we just got the last PCE, and the last PCE applied to the previous CPI. So this CPI data will be new. If you just look at commodity prices, CPI is probably going to weaken a little bit. It'll be interesting to see if the month over month number is flat or negative again. I think it'll be slightly negative, but I think that's the pause that refreshes for it to start to head back up. We saw copper with some interim strength. Now we're seeing crude oil with some interim strength after a little bit of sell-off. We'll have to see where that goes. But if you mark that number, it's going to be August CPI, right? And if you look at the month of August on crude oil, on copper, it wasn't really that negative. The negative started over the last few days of the month.
Well,
So,
if you look at just the monthly for the DBC, I mean,
mhm.
August was still technically up.
Right,
It was down on a closing basis but it came off the lows. It came well off the July lows.
right.
So it's interesting here to see where it is, but it's basing right there. So commodities aren't really breaking down; they're more in
No,
a trading range now.
no.
So if we do get a pullback, it's not going to be like earth shattering.
Right. Hey, Coco, to your point here, it already affected the markets a little bit. Generally, the first move after non-farm payrolls is wrong. That's somewhere in the 75 to 80% probability statement that the first move after non-farm payrolls is wrong. We're kind of seeing that on this chart right here, right? So I don't think it's not going to affect the market. I just don't think it's going to affect the market all that much.
I mean, we're breaking back to that level I put on the live stream a little bit ago. This 12,300, which is a breakout level, and if we start breaking down below this, that's not. Then you essentially reverse the breakout move. Now the S&P is holding up a lot better.
Yeah, it's
But
a nice little move if it holds that level. It's a nice little long trade, but it'd
yeah,
be very short term.
I mean, it's just, but the market's just not, and there was not a lot of broad buying pressure this morning off
Right.
the open. It was
No.
all right. Nah, it's already, eh. So, good morning. Wavy's in New York City.
Wavy's in New York.
Hey, Bob, Mike, have you guys seen that the NASDAQ is requiring listed companies to have diversity quotas?
Yeah.
Uh, I'm not even.
Whatever.
I'm not
What,
commenting.
whatever.
My comment. I think you can know my comment from my no comment.
Exactly.
All right. Not seeing much else. It looks if we do remain bullish, it will probably be bullish to choppy. Next major thing I'm watching is going into the European close based off this morning price action. We did not get any follow through, retesting some key levels on this pullback. The only other thing I'm watching is see how the market reacts closer to the European close. Get that out of the way. And that's where I'm sitting right now. So we can wrap this up for today, everyone. I might be a little late because the Jim Iorio Futures Edge podcast recording, but I'll be on briefly after that, after the close.
All right,
And
guys.
Bob's trying to stay awake. Bob's trying to stay awake.
I need a nap before the podcast, or I'm just going to be like, Mike, glad to have you, and then my screen's going to go blank.
Well, I can. Hey, I'll just give a couple key levels and call it a
Hey,
day.
all right, guys, have a good Labor Day.
All right, you too. Bye.
See you.